Ladies and gentlemen, good evening and welcome to Stallion India Fluorochemical Limited Q3 and 9M FY25-26 earnings conference call. As a reminder, all the participants' line will be in listen mode only. There will be an opportunity for you to ask the question after the presentation concludes. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference may contain forward-looking statements about the company, which are based upon the beliefs, opinions, and expectation of the company as of the date of the call. This statement do not guarantee the future performance of the company, and it may involve risk and uncertainties that are difficult to predict. I would now like to hand over the floor to Mr. Parth from Confide Partner. Thank you, and over to you, Parth.
Good evening, ladies and gentlemen. Parth here from Confide Partners. We represent the investor relations for Stallion India Fluorochemicals Limited. On behalf of Confide Partners, I warmly welcome you all to Q3 and 9M FY25-26 earnings conference call of Stallion India Fluorochemicals Limited. The company is represented by Mr. Shahzad Rustamji, who is the Managing Director and CEO at Stallion India Fluorochemicals Limited. I would now like to hand over the call to Mr. Shahzad for his opening remarks. Thank you, and over to you, sir.
Thank you, Parth. Good evening, everyone, and a warm welcome to Stallion India Fluorochemicals Limited Q3 and 9 months FY26 earnings conference call. We are pleased to report a strong performance for the quarter and 9 months ended December 31st, 2025, reflecting the continued execution of our integrated business model, expanding product portfolio, and strengthening presence across refrigerants, specialty gases, and high-purity applications. Let me take you through the financial highlights. For Q3 financial year 26, the company reported total revenue of 104.87 crores, registering a 23.2% year-on-year growth. EBITDA stood at 13.56 crores, while PAT stood at 11.12 crores. Despite some quarterly volatility, profitability remains structurally stronger compared to earlier years, supported by better product mix, higher contribution from aftermarket, and value-added gases and operating leverage. For the 9 months ended FY26, total revenue increased to 321.18 crores, which is a 41.7% year-on-year growth. EBITDA grew to 43.69 crores, which is up 48.6%, and PAT surged to 72.8% year-on-year to 32.9 crores. Earnings per share for 9 months FY26 stood at 4.15 compared to 3.1 in the corresponding period last year. These numbers underline the strong operating momentum and scalability of our business model. From a strategic standpoint, we continue to make steady progress on our integration roadmap. We have received the environmental clearance for our 10,000-ton per annum R32 manufacturing facility at Bhilwara, Rajasthan, which is a critical step towards backward integration and long-term cost competitiveness, with expected commissioning by August 2026. We are significantly expanding our industrial footprint throughout the upcoming HFO, HFC blending and debulking facility at Mambatu, Andhra Pradesh, which will strengthen our presence in the high-growth market in South India. In parallel, we are building a strong position in helium and advanced high-purity gas solutions. During this period, we entered into a strategic technology tie-up with a Portuguese-based company, SIS Advance, for access to advanced helium recovery and helium liquefaction systems, enabling us to address space, defense, semiconductor, and high-precision industrial applications. Additionally, we have signed a long-term strategic partnership with Sharjah Oxygen, Dubai, for technical collaboration and sourcing of liquid helium, with supply originating from Ras Gases and Oil Fields in Qatar. Together, these initiatives are helping us establish a resilient, globally connected helium supply chain for India. With 4 operational facilities and 2 upcoming sites, a pan-India distribution network, over 40 gases and blends, and more than 200 customers across 15+ countries, Stallion today is well positioned as a forward integrated platform spanning refrigerants, specialty gases, and high purity industrial gases. Given our strong performance in the first 9 months, we remain highly confident of achieving our FY26 revenue guidance of 430 crores revenue and PAT guidance of 40 crores, and sustaining our targeted 30 to 35% CAGR over the next 3 years, supported by backward integration, higher value products, and margin expansion of 3 to 4% over time. With that, I will now open the floor for questions. Thank you.
Participants are requested to raise their hands for their question. Also, one can request the question in the Q&A box. We have Mr. Sashank Jha. So you may unmute and introduce yourself.
Yes, sir. Actually, I have multiple questions. First is regarding that you have sold your holding in two tranches. Okay. First, you have sold with Chemex promoters, and prior to that, 2 days ago, you have again sold it. Okay. So my question is this both money going to R32 plant?
Yes, basically we had during that period we had already tied up to go in for a preferential issue, and the pricing at that time was approximately about 180, 170, 180, and we thought it would hold steady. So everything was tied up for the preferential issue. Everything was worked out, but somehow the upward swing in the market, the volatility was such that every day there was an upper circuit. And suddenly, by the time before we could get down to any working, it had already crossed 250. So the preferential issue could not go through, meaning it became unviable to go through. So the volatility continued for a month plus, where it became apparent that in this volatility we cannot go for a preferential. At that time, QIP was locked in. So the only other, and we were not going in for a rights issue at that time. So basically, it it bound us on the fundraising. So in the short
Okay.
run, what we did was I sold 2% of my shares, 2% of my shares, and we raised the funds. That funds all were put into the company interest free to kickstart the R32 plant work. It's a time bound project. We couldn't wait.
Okay, got it. And second is regarding the sir Mambattu and Khalapur plant. Like in last con call, you told that it will be started by December and January. And I saw the today presentation, you told Q4 FY26. So why this delay, sir?
There are multiple reasons for it. In terms of helium, like I said, the helium plant at Khalapur, operationally, we completely changed in August, September. We completely changed it from a 200 bar system to a 300 bar system to be up to date to the latest whatever is available. So everything had to be changed. The entire piping, all the cylinders, all the containers, all the uh, the evaporators, everything has to be changed to meet the new pressure guideline. So the whole thing got moved back by over 3 months. Second, a lot of the material is incoming from US, so there was a little delay. Everything currently the plant is fully operational, meaning in the sense the work is all done for the plant. Incoming imported material is awaited, which should come. We should have startup in March. For Mambatu, when we started the R32 facility, suddenly it changed. Number one, it changed a lot of dynamics in the sense now that we would be having captive R32, the blending is going to be on a very different scale and level than what we had originally planned. Originally was planned that, okay, you do a little for the country, etc. Now the potential opening up is for a huge export market also, and for a huge volume. It's not limited to the small volumes that we had originally planned. The plant itself is scaled up. Initially, the design of the plant, etc., it's a 5 acre facility. So the design was basically half the plant was empty in the original design. Today, the original design was 5 tanks. Today it is 10 tanks. We are also putting up the same semiconductor and helium facility that we have in uh, Khalapur. We are putting up that also. We are putting up hydrocarbon facility also, and additional tanks for the blending, what we have planned. So all that, the complete re-engineering has to be done, number one. Change of plans and enhanced volume, meaning it's almost like making 2 plants compared to what we had initially set out with. So that also, it should become operational by March end or April.
Sir, I agree, but communication should have been come earlier regarding these things that there delays are happening because from long time there were no
It
proper
it
communication.
it
Yeah.
it was all it. See, it you have to understand one simple thing. It does not affect us operationally. It will enhance our operations. Number one. Number two, communications have been amply given, where we have stated in the last call and earlier also that both the plants have had to be completely re-engineered with the new changes that have come as we move along. So there is no sense us wasting money and putting things on something which was planned 2 years ago when the current ground situation has completely changed. So it's in line with that, and information has been amply given.
Would
Okay.
request Mr. Shashank to join back the queue since we have limited time from the management. A kind reminder to all the participants, please raise your hand to request your question. Also, one can request the question in the Q&A box. And one short reminder too that as we have restricted time from the management, everybody is restricted to 2 questions. Next, we have Mr. Aditya Sen. Sir, you may introduce yourself.
Hi, this is Aditya Sen from Findoc. So my first question is regarding the Bhilwara plant. We were about to commission this in July, both the phases, and in the opening speech you mentioned that we are pushing this to August. So is this actually pushing the deadline, or we are just taking some margin of safety? And if we are pushing, then why are we doing the same?
First thing is we have provided a projection of 6 months of production. That means technically I have given you production cycle starting 1st October, not August. So whether I do it in September, whether I do it in July, whether I do it in June, it makes no difference because our projections, confirmation and timeline provided is for 6 months production in 26.
Do we have a trial production also before we commence this facility for commercial purpose?
We would be having a trial production. We would be having a trial run. We would be having initial startup debottleneckings and whatever, the quality checks, etc. So all that would be done. See, basically, if you've noticed how we operate, we always tend to provide whatever we say carefully and with a lot of margin. So basically, what we have projected is start from October. We plan. I've said we will complete everything by August. Our target is much earlier.
Fair enough. In fact, this was the only reason why I was asking this, because in the last call also you mentioned that you achieved the goals on time, and here we were pushing it. So I thought I'd just confirm this, that if you are postponing the commissioning also.
We are not postponing anything. It is absolutely from day one. What I've been speaking is there. If you see from day one, 6 months ago also when we have spoken of this, I have always given 6 months production cycle for 26. So 6 months is October to March.
All right. And the second question is
Would
regarding
request
fund.
Mr. Aditya.
That was only one question. May I?
Sir, please join the queue. We have restricted time from the management. We'll allow you the next time. Next, we have Mr. Arindam Datta, sir. Sir, you may unmute and introduce yourself.
Yeah, hello. Thank you for giving me opportunity, sir. I have a couple of questions. One question is like, as we know that we have only distributor license from Honeywell, for HFO blend, and I guess Navin has the production license. So does that mean whatever we sell HFO, that R32 which is used for that HFO, we cannot use our own production R32. We have to always get it from Navin, or because why I'm asking this question, because of our aggressive expanding of R32 production, we have a 10,000 metric ton anyways coming from Bhilwara plant, as well as we are planning for Ukhalia plant for another 10,000 metric ton, if I am correct. So just wanted to understand where is that so much demand you are seeing, what you said.
Firstly, I think there's little confusion with you in regards to your question. You said, see, basically, we do not like speaking about another company, number one. So I don't want to comment on that. You said Naveen has a license to produce HFO. Then where is the link up with the R32 with that? There is no link up.
No,
If they have
R32 is the one of the main constituent of HFOs.
no, no, it is not. HFO does not use R32. HFO blends use R32. Naveen does contract manufacturing for Honeywell for one of the products, number one. We cannot speak on what contract some other company has or what is the dealing another company has. We can speak about our company. So ask me what you want about our company.
Yeah, so R32, like we are expanding it to 20,000 metric ton, right?
No, we are expanding into 10,000 metric tons. Ukhalia is in Bhilwara.
Okay, so it's the same plant, you mean
It's the same.
Ukhalia and Bhilwara?
It's the same plant only. Ukhalia is the industrial area. Ukhalia is the name of the village,
Okay,
and Bhilwara is the district.
I got it. Okay, so in that case, like why do we have then like it was probably 230 crore initially, whatever I have heard about, right? So
It was a 5,000 ton plant originally planned, which we have expanded to 10,000 tons. It was planned in two phases. First, 5,000 tons, and then the follow up 5,000 tons. We decided to go in for 10,000 tons together for economies of scale.
So, like the capex, what we had communicated last con call, so that was probably like 200 some odd crore, right? Right now, it is another 362 crore that you have basically
The,
asked for
to-
the.
the total funds being raised are 364 crores, number one. That is for twice the capacity.
Okay, and so how much will be from the preference or whatever the this right issue,
Everything will be from the rights issue.
and like what you have given to the loan to the company for interest fee, that also included into this 362 or no?
That is included in this, and what I have given into the company will come back, will be reissued in the rights to me.
Okay,
I will be subscribing for the rights issue also.
sure, yeah, sure.
Request Arnimdam
Thank you.
sir to please join the queue.
Sure, thank you.
Thank you. Participants are requested to raise their hands for the question. Also, one can request the question in the Q&A box. Next, we have Mr. Jay Mehta. Sir, you may unmute and introduce yourself.
Hello, sir. I have two questions. Firstly, on the land side, basically for the Bhilwara plant, in the draft offer, there is mentioned like you have like got approval for two lands out of three you have like proposed. And so my major question is for the 10,000 ton plant, do you require that all the three lands, or is it like just one land and you need and you like for backup you are buying three plots?
No, it's basically, see, in a uh, how to say, in a chemical process plant, you need to have all your plans, whatever you're going to do from start to end. You need to be very clear. You cannot say that today I'll make this plant and then unplanned. Tomorrow say I want to put something else. Everything has to be planned from day one to the last day, whatever you want to do. So whatever you are going to be making is got to be an integrated design of how. Now I'll give a simple example. You're going to make a water treatment plant. You're going to be making a treatment plant for hazardous waste, etc. Now, every expansion you do, you're not going to start making a separate plant for that. You're not going to duplicate. So you'll have a bigger one area, and in your entirety in your design, you will already have taken in that this is the common area where this will come. This is the common area where the water will be. From here, the water treatment will go. This is the raw material storage. So the common raw material storage for all your processes, what would be there. So basically, your design has to be complete. So you cannot, bank that tomorrow I'll buy land and I'll expand. It has to be either you have it and you have the whole plan together. You do your work in phases. So currently, first we'll be setting up the 32 plant. Next, we'll be setting up a plant for the byproduct commercialization. And a chemical process, all your byproducts, the company that manages to commercialize its byproducts becomes successful. So basically, the next step would be by commercializing all the byproducts or waste products that come out in each of the manufacturing process. Third is we've already declared our plans for HFO plant next. So in a series, it's all going to be there. Currently, for the current operations, we need the two plots critically. The third plot also is there as part of the expansion for whatever else we have got planned. We've got series of things planned. We've got series of plans, everything in mind and planned. Why we are not putting it up? We don't want it being construed as leading the market or trying to inflate what we're trying to do, etc. So we are being little reserved in whatever we are releasing. But our plans are for the next 4 years, we'll be continuously expanding and growing the number of plants that we have and the products that we have.
So for three land parcel, you are the estimated capex is 12 crore, or the for the two of them is the 12 crore. What is it exactly?
All three. See, it's with a MOU signed with the government of Rajasthan. Land provided is highly subsidized, and allocation is done on the specific MOU. When you sign a MOU with the government, it's not a small thing. It's meaning it has its responsibilities and it has its benefits also.
Second question, sir, I had was
Would request Mr. Jay, sir, please, sir, can you join the queue, or as we have limited time from the management?
Okay.
Yeah. Participants are requested to raise their hands for the question. Also, one can request the question in the Q&A box. Next, we have Mr. C.K. Nathani. Sir, you may unmute and introduce yourself.
Yeah, hi. Can you hear me?
Yes.
Yeah, I just want to know one question. This is regarding the pricing power of Stallion. So, you say that if R32 gas is produced and it is reached at the good purity level, the customer would be indifferent. So, what's the Stallion's pricing power if you want to retain the customer?
I have not really understood the question. You mean, see, once you go into manufacturing, my pricing power will be same as what is Naveen's or SRF's or anyone else's or any
Okay.
other manufacturer. So suddenly, what happens is our price parity. Okay, there may be little difference in further backward integration or something, but that's very marginal. So basically, we get the same advantage as any other manufacturer.
Okay, so how you retain the customer? You must be having a customer retention. Like, would you lower your margin, or how your
Let let
pricing is competitive in that sense?
let me put it this way. Currently, we don't manufacture and we still retain the customer in spite of global multinationals, global giants who are 10 times the size of the local company and against the local manufacturer. So tomorrow when we become a manufacturer ourselves, what gives you the impression we will not have strength to retain or keep the market that we have or grow it? Without being a manufacturer, we are managing. So if you have a manufacturer with double the strength, why do you have doubt that it won't be more strength?
Second part of the question is that your statement is that the company's future target is 35% CAGR for next 3 years. So how is your underlying data on this? Like you are saying 35% for 3 years. So is there any roadmap on this to be
Yeah,
consistent for the next 3 years?
yes. First thing is currently our turnover targets given is 430 crores. I think with our 9 months performance, if this was a cricket match, 5-day match or something, it would already be declared. So we've achieved, we will achieve whatever we have projected. So this year is 430 crores. Next year, we would be having the start of the Mambatu facility. We would be having the start of the helium facilities. That itself would provide additional growth, number one. So safely to say that 50 crore more should not be an issue. And most importantly, you'll be having 6 months of R32 production. So safely taken, that should be about 275 crores. So 675 crores is there. The next year, you'll be having the 12 months production of R32. So even without any other growth, you will still be from 675 and at 275 plus 950 crores would be your growth next year. And then the following year, you'll be coming out with the HFO.
Okay. Okay, understood. Thank you, sir.
And this not
I'll
even
join
count. This is not even counting the natural growth of the company in the current field that it is in. Without that, also it is pretty much clear that the growth factor would be there.
Okay, understood. Thank you. We'll join the queue for another questions. Thank you.
Participants are requested to raise their hands for the question. Also, one can request the question in the Q&A box. Just a quick reminder, as we have limited time from the management, everybody is restricted to 2 questions. Next, we have Mr. Ramesh, sir. Sir, you can unmute and introduce yourself. Mr. Ramesh Shah, sir, you can unmute and introduce yourself.
I am unmuted. Am I audible?
Yes, sir.
Yes.
Okay. I wanted to ask you about Khalapur and Mambatu plant. Just 2-3 things. That all the equipments that we are importing, have they been shipped? If they have been shipped, when will they reach the Indian port? And once it reaches the Indian port, in how much time the commissioning can happen? That's one thing. And the second question is, somebody just asked earlier about the rights issue. So I'm guessing that you sold some stake, so that will be reissued to you in terms of your rights shares. Will you be putting more money apart from that? These are the only 2 questions I have. Thank you.
First thing is for the Khalapur and Mambatu. Mambatu has mostly Indian supplies because even the imported material that we are purchasing, like the compressors, pumps, the flow meters, etc., they have the MNCs have their branches or companies in India, so that everything will come from India itself. Number one. And most of the stuff is ready, meaning we don't have to wait. It's now the engineering is going on and the construction work is going on. In terms of the helium plant, everything is completed. Every plant and machinery is at site. And I think the plant should be fully operational and ready by this month end. The last few items, critical items that are not manufactured here and are coming from US, they've already been shipped out. They should be coming by, I think, March first week. They should arrive.
That is for which plant?
Helium plant.
And the rights thing?
Rights issue, whatever I have, number one, sold, definitely I would be, whatever I've given to the company, meaning it's on interest free, so that will come out and come back into the rights and come. And whatever else, definitely I would look at subscribing as best I could.
Thank you.
Participants are requested to raise their hands for the question. Also, one can request the question in the Q&A box. Next, we have Mr. Santosh Singh. Sir, you may unmute and introduce yourself.
Hello, good evening, Rustam ji. Am I
Good
audible?
Yes, sir. Good evening.
Sir, my first question is, since we have made these changes to the plant and now our capacity is a double, so when would we achieve the maximum capacity basically, or when next expansion will be needed? That's my first question. Let me put you the second question as well. You have also made changes to our product basically. So is margin different? As I think one of the participant asked about the similar thing. Whether the customer will be different shade of the customer would be there, or how the margin would be there in this new product. Yeah, that's my two questions, I think. Yeah.
Sorry, can you just your first question is what?
Related to the double of expansion, right? We have made changes
Okay.
to the plant, right?
The expansion, we have doubled we had originally planned for 5,000 ton manufacturing. And the reason we had planned for 5,000 ton manufacturing is that we noticed that all the manufacturers in India usually started out with that capacity and then expanded. So basically, in our think tank, in our planning section, there was a school of thought that maybe there's a learning curve, or maybe why do we want to reinvent the wheel? Why don't we follow what everyone have done? So start off with that size. But afterwards, as we went through the whole design engineering and the planning and everything, we realized that there's nothing difference between 5,000 or 10,000. It's just a scale of what, at what they wanted to start off with. So then we decided to, because, it's very difficult once you have a running plant to expand and double the
Right.
capacity. So then we decided that like Mamba 2, rather than do it in phases where you have an existing plant needing shutdowns, you might as well complete everything at one shot. So the capacities were doubled. Your second question is, the product remains the same, 32.
New product, like even helium, right? How would the margin would be in these products, and whether the customers are different?
All the new products that we are getting into, and all the new business that we are getting into, all will be having a margin ranging from 16 to 24% PAT. It will enhance our PAT currently that is at 10%. We're looking at enhancing it to 24%.
Okay, got it. Yeah. So thank you so much for answering my questions. All the best for this thing.
Participants are requested to raise their hands for the for the questions. Also, one can request their question in the Q&A box. Next, we have Mr. Ashish Soni. Sir, you may unmute and introduce yourself.
Yes, sir. So I think, are you sufficiently funded for this Bhilwara plant, or do you think some more funds only after rights issue? Because if at all things goes wrong, what's your backup plan? Because I heard initially you sold off share earlier, then you had challenges in preferential QIP. So I just want to understand the current status in terms of how much you have and how much you're planning. I just want to get a clarity on that front.
We don't have any issues with funds or anything. Meaning, basically, see, what we are looking at is currently we are debt-free status. If we want to go for project loan under the MOU that we have signed, or on auto basis, we would end up getting project finance also. The banks are already tied up into the MOUs with the government of Rajasthan. So number one. Secondly, it's a greenfield manufacturing facility. The company is listed. So if we wanted to raise project finance, meaning we absolutely have no issue on that. It would happen in 20 days, 25 days. So in terms of funding that way, in terms of internal accruals and funding also, in case of anything, we see no challenge or any issue, meaning we are not stressed on funds or anything, number one. Number two, reason for going for rights and expansion. See, this would probably be the last dilution. We don't see onwards the requirement for any further dilution because the cash flow would pay, and any further expansion would be a mix of debt and warrant, meaning debentures or something. But I don't see further any requirement of any dilution. So basically, how we saw it is at the current market volatility, in the current global turmoil that we see all around, we wanted to ensure that the company is on a debt-free status only. We didn't want to, at this stage, take on any debt. So technically, we have absolutely no issue. Second, I'm happy to say that in spite of the volatility in the market, the general market conditions coming down, etc., our shareholder base has grown from 40 to 50,000 shareholders. And we see that as a very strong indicator that there are a lot of people who would be interested. And we see no challenge in the rights issue at all.
And second question, I think you did sort of tech transfer or JV or whatever for the helium thing. For HFO, is there anything planned? And how are you planning manpower for all these plants? Because earlier your mode of operations or the way of the working was different compared to a manufacturer, right? So just throw some light on this as well.
See, it's basically when you sign for technology transfer, when you sign for design engineering, now obviously we are not sitting and designing this plant. There is a professional company contracted for doing that work. Even the setting up of the plant, we are not doing anything. There's a professional EPC contractor specializing in this job who are setting it up. So as part of the process, they also have to get the manpower, they also have to train the manpower, and they also have to ensure smooth running for 2 years.
But what about HFO blend? Do you think you require some sort of tech transfer or something from any other company, foreign company?
Even for this, we have taken tech transfer, no? We have paid for the technology transfer, we purchased the technology pack, and we have gone ahead. The same would be the process there also.
Okay, it will be like how much?
Would request Ashish sir to please join the queue. Apologies for the same. Next we have Miss Sanchita Sud. Ma'am, you may unmute and introduce yourself.
Hi, thank you for the opportunity. So my question was that if we talk about our current capacity, that is excluding Khalapur, Mambatu, and Bhilwara, what kind of revenues can we do and like at peak utilization, and what is our current capacity utilization as of now? And my second question would be that could you please repeat for this Bhilwara plant? What was the capex amount and how much revenue can we do from 10,000 metric tons capacity?
Ma'am, can you ask the first question? I've forgotten what you asked.
Yes, I was asking that on our current capacity, that is excluding Khalapur, Mambatu, and Bhilwara, what kind of revenues can we do at peak utilization?
Okay, let me answer that first.
Yeah.
Your current turnover that we are seeing is excluding this 3 new facilities. So we've done 430, meaning we had given a projection of 430, and we have done 430. In March, we'll give the projection of what we'll do in the coming year. And basically, we would be meeting that. There would be growth in that itself. Even in the existing business, though, like when we are speaking, we don't give forward statements or we don't give forward projections, highly raising it up and all. But definitely, there would be a growth in that. The reason, now you'll ask, meaning where the confidence comes from. All the current HFCs, all are at $5, $6, $7. All the HFOs are at $25 and $30. All the HFCs are slowly changing over to HFOs. So the normal growth that we would see would definitely have a growth in the business itself.
Okay, all right. And so my second question was from the R32 plant, from 10,000 metric tons capacity, what was our capex amount and how much revenue can we expect from this facility?
Capex amount, we are raising 364 crores we are raising for this R32 plant. In the first year, we expect 50% production. I've given a target of 6 months production, so October to March. We expect to have about 275 crores. and the PAT is at the least expected, meaning 24%. So it would be 66 crores PAT. In the next year, 27, it would be 550 crores revenue and 132 crore PAT, combined with our current business and the new two facilities starting up. So your PAT would be in the vicinity of like between 180 and 200.
Okay, all right. Thank you so much.
Next, we have Mr. Jay Mehta. Sir, you may unmute and ask your question.
Sir, I had a query regarding in the latest quarterly update you have given. There is
You're from what meaning organization or this?
Sir, I am from Helios.
Okay, sorry.
Yeah. Sir, my query is regarding the IPO proceeds. There is like a huge chunk of money which is still unutilized on the books in the December financials, basically, which we can see like for Kharapur it is close to 47%. For Mumbai it's approx 80% unutilized. So
we've got a total of about I think 26 crores unutilized. The reason is number one, the major in Mambatu, the construction work is going on. The way we work is we never pay in advance. We pay after the work is completed. So basically work is undergoing. So why would we pay them in advance?
okay.
We don't pay for any of the works that we have done, like even for the plant and machinery, etc. We don't pay advance. Only for critical equipment, we will pay 30% advance. Rest is against delivery. So most of the things like that have 4 months delivery period or 6 months delivery period, it will get paid when the material arrives here. Only the advance is paid out. And for regular Indian suppliers or contractors, like any contract work that is being done on the site, etc., they have to complete the work. They'll get a small tranche in between, but the bulk of payments will only be done on completion of work.
Okay. Second thing about I'd say talking about only the helium plants basically for the Kharapur and the Mumbai. So what is the like the I let like there is a huge upgradation happened basically. There must be some higher capex required as well from earlier 50 crores out of IPO process. There will be higher capex involved. What was the amount and what is the like the revenue potential now, given that all the upgradation has been taken?
The helium facility in Khalapur, that work has been concluded, meaning that work is getting concluded. We are also expanding to Mambatu with helium facility to give us reach in the south. Now, all that comes from the internal accruals of the company.
Yes, sir, but what amount?
It would be, meaning it would end up being about 15-20 crores.
And revenue potential?
You you have to understand how the business evolves. If you have one setup in, say, Maharashtra, when you're supplying the bulk of your, like, the 60-70% of your profitability comes from the liquid helium, not from the gas. So when 70% of your profitability comes from the liquid, you have to be within 500 kilometers of your target customer. That's the maximum you will be able to reach profitably. So what happens is, if you're thinking you'll sit here and you'll service someone 1400 kilometers away, you're not really going to be a player. So whoever's there will have the chunk of the business. Secondly, you will always be a marginal player. You will not be a bigger player. Like what makes a Linde, and they're spread all over. So when you have the facilities in each regional site, India is a big country, length, breadth. So technically, within 500 kilometer radius, when you have, like in the south, you have In the west, you have in the north. Now, north we already have land. We've got a facility in Gilot. The next facility would come up there. So it is important that you follow the norms of the business and what makes economic sense. When you're targeting helium as a totality and you want to be a player, at least a 20% player in the market, 25% player, you will need to have multiple plants in each of the regions.
Understood.
Meaning you won't be able to get that 20%, 25% market share having one facility in India. Even though that facility may be able to provide that by capacity, but you won't get that volume of share.
Okay, sir. But again, you must be targeting something out of it, right?
A long-term target is meaning long-term means within 5 years. Our target is 200 crores for helium.
From both.
Helium and specialty gases.
Okay. No.
Thank you, Mr. Jay Mehta. Now we would like to hand over the floor to the management for the closing remarks.
Thank you. It's been a real volatile time for all investors. Basically, with the markets, being volatile, happenings globally with US especially, etc. So it's been with metals going up, down. It's been a highly volatile time for all investors. Basically, uh, uh, what we look forward to is that with this upcoming facility within 6 months, this facility is a normal company would take 18 months to set up this facility. So basically, what we are doing is it would be establishing a sort of a record for a chemical process plant if we conclude and make it in the time that we have said. Once that facility comes about, we believe that the company will hold a very different value. It will also hold a very different stability in respect to its marketplace, etc. And that should work out very well for all the investors who have trusted and have been there with us. We would be having a rights issue shortly. We would be coming out with all the announcements, etc. for it. And we look forward to all our investors participating in that also. Thank you.
Thank you for joining Stallion India Fluorochemical Limited Q3 and 9M FY26 earnings conference call hosted by Confide Lead Partner. Participants might sign off.